You've probably already heard about the dollar cost averaging method into index funds or ETFs to ultimately get you to about $1 million by the time you retire. Now, although that sounds amazing, in this video, I want to break down what does $1 million actually mean at retirement and why I think you're going to be quite scared by this strategy and the results and why you need to start acting now. If you're interested, keep watching. Hey guys, my name is Ravi and welcome back to Personal Finance with Ravi Sharma. If you're new here, smash that subscribe button because I talk about real estate, cryptocurrency, and financial freedom. Now, it's obviously an amazing thing to know that you can become a millionaire by simply doing a few small things. Now, I'm not discounting the fact that this is a real viable strategy that will get you to $1 million, but is $1 million going to be enough for you to retire? Now, you might be 50 and you're looking at this strategy and going, by the time I turn 60, which is in 10 years time, I'm going to have $1 million. $1 million is plenty because you use the 4% rule, which means you actually extract 4% out of your entire holdings, and that means you can live on $40,000 a year. Now, if you have a house paid off, $40,000 is huge. It's amazing. But if you're someone that's young, 20s, 30s, 40s, and 50s, and your goal might be having $1 million in the bank account or having $1 million in ETFs or shares, and then I can just receive a dividend or some sort of yield, you might be in for a shock because, as you know, inflation is a real thing. And apart from the fact that over the last 2 years, you suddenly got interested in economics and the property market because everything seems to be exploding and happening all at the same time, inflation has always been a concern for a long period of time. Now, here in Australia, the inflation target for the RBA is 2 to 3%. But how often are we actually hitting those numbers? Well, the inflation rate in Australia has averaged 4.88% from 1951 until 2022. Now, we already know in 2023, it's a lot higher, so that average would be skewed slightly, but it's going to be about 4.88%. So why exactly is this important? What I'm about to show you is an inflation calculator, which I'll link in the description below so you can check it out for yourself as well. But this got me scared, and I'm actually going out there buying assets. I got scared for a lot of people around me that are doing this strategy of, hey, how do I get to $1 million and then I'll be sorted? When in reality, you can actually make the moves now. Now, before jumping into the inflation calculator and you getting scared, smash that like button because apparently it brings down your blood pressure, and that's exactly what we need right now. So I'm here on the inflation calculator. What we're trying to figure out is what is $1 million actually going to buy you? Because we know what inflation is, so we can reverse engineer it and see how much would be enough for us to live a comfortable lifestyle at that point. Now, I guess what we've got here is $100 in 2003 would actually be worth $159 in 2023. That doesn't mean you made $59. In fact, it's the opposite. It's saying that $100 could have bought you $100 worth of goods in 2003, but 20 years later, to buy the same $100 worth of goods, you would need $159. Now, mind you, this is just basing it on 2.69%, which is what this actual calculator's figured out is the average. But this again is based for the US, it's not based for here. Now, we've got to input what we think the inflation rate's going to be. So if we looked at historical data being at 4.88%, let's put that in so we know what that's going to look like in terms of a real figure. So we put 4.88%. Now, what we're doing here is we're going, what's it going to be worth in 30 years from now? Most people are going to be working for at least 40 to 50 years, but in this case, we're going to put a 30-year window, and we want to figure out what $100 worth today would buy us in 30 years time. So in this case, $100 today would be worth $418 in 2053. Meaning the same $100 worth of goods would now cost us $418 just to buy the same amount of goods. Now, this probably isn't going to make a huge amount of sense until we put the $1 million there. Everyone's trying to achieve $1 million. So what does that look like? So what I'm going to do is I'm going to change what that figure looks like. So $1 million in 2053, again, you can adjust these numbers for when you're expected to retire. But in 2053, we're expected to have $1 million. In 2053, it buys you $1 million worth of goods. However, if we're starting today, what would it actually be worth in today's value? And that would work out to be $239,453. That to me doesn't sound like financial freedom. In fact, that would scare the shit out of me. It basically means that you've lost about 76% of your purchasing power. This is why we hear from the rich people saying, oh, cash is trash, you should invest in assets. Because if you were simply saving your money and you had $1 million in the bank account, you would effectively have lost 76% of your purchasing power. Now, that is definitely scary. What's scarier is that you might be in your 20s or 30s or 40s where you can actually work. So you're going out there and saying, I can actually make a difference here. But if you didn't watch this video, or you haven't come across these investing terms, or you didn't even know that inflation was going to eat up so much of your purchasing power, you're basically saying, well, I think it works because I heard some people doing it. Let me go do the same thing. I need to get to $1 million. So you go ahead and you do what you need to do. Same thing with your super. You're probably like, oh, okay, cool. I'm probably going to end up with about $1 million if I'm lucky, but I'm probably going to end up with about 500K. That's okay. My partner and I, 500K each is going to be sweet. But you're going to get get there and it's only really worth about 240,000 in today's value. And this is scary because you can actually do something about it now, but by the time most people realize this, it's too late. They can't change their habits. They can't go in suddenly go, oh, well, I'm gonna now make an extra $2 million because that's how much I actually need. No, because at that point, you're not at your peak earning potential. And that's why we have such a big crisis with pensioners not having enough money, especially with inflation being a lot higher than what's actually being accounted for. Believe it or not, but over the last 18 months, inflation was a thing. But before that, inflation was always a thing. It just wasn't being documented. It wasn't being promoted on media. People weren't talking about it because inflation's boring. I don't really care about that. But now that it's come to the forefront and we know interest rates are rising, people are questioning, why is it rising? Oh, it's because of inflation. I get it now. And that now is compounding because once we're aware of these things, we need to start actioning those things. How many people actually action it? Not many. And if we've gone out there with this strategy in mind that I'm going to invest or dollar cost average and get $1 million, well, we know it's not going to be enough. So what's the solution here? Well, I have no idea what your situation looks like, which is why I'm linking the calculator down below. But if you need help around your strategy or actually want to go ahead and purchase property as part of that strategy, you can find a link to the website in the description box below because we'd love to help you get there. But one of the things for me at least, it's how do I go and beat inflation? How do I go and build a portfolio? And how do I know that I can end up with more than $1 million? If I want to retire on $1 million worth of value, I need to end up making probably about 4 million in today's terms. I need to probably making 4 million at that point. So I need to do 4x what I originally thought I needed to do. Now, you know me on this channel, I like to invest in real estate. It's a big part of my portfolio, but I also diversify in things like crypto and also trading card and collectibles. So for me, I'm diversified in that way, but a large portion of my wealth is in real estate. And this graph here explains why. The real reason real estate acts as an inflation hedge is that over time, real estate values mean revert around replacement cost. And in periods of high inflation, as the following chart shows, replacement cost increases at a faster rate. So buying at or below cost preserves real value of capital, no matter the inflation outcome. Now again, this doesn't work every single year, but there's a trend. This is years and years of studies to show what this means. And what we can see is over time, we see asset prices like property go up because the replacement cost, the materials required to actually build the property is increasing at a faster pace. When you've got things like property and it actually sits at the base of Maslow's hierarchy of needs, you've got their shelter. And that is why it's so important that whether people are renting or whether people are going and buying the place, you're getting cash flow and you're getting capital growth. For me personally, this makes so much sense to be able to go into something like this, build my wealth over time, and I can do it with leverage. It's going to get me faster to my goals, which honestly have to be so much higher than what anyone else thinks because inflation is a real problem. And me simply coming out here and saying, look, you can buy 2 properties or 3 properties, you'll end up with $1 million worth of equity. Yeah, you're sweet. But the reality is that you're probably not sweet. And it's why we need to start thinking outside of the box because the 5 closest people to you are going to end up in the same position as a majority. And I don't want that for you. The reason I don't want that for you is you work hard for the time you have in your 20s, your 30s, your 40s and 50s, only to get sold this dream that saving your money was going to get you to become rich. Or I can retire financially free now that I've worked for 40 years. I've seen my grandparents go through the same exact thing. They worked really hard, they have their own place, but they live on the pension now. And if something volatile happens like inflation goes up, they struggle. So this is why I come from a place of passion and a place to actually help you, whether that's you using my service or not. I just want you to be aware that it's just because $1 million sounds great, it's not what it meant 10 years ago, and it definitely doesn't mean what it means today versus in 30 years time. I hope you guys have enjoyed this video. If you have, smash that like button, share it with someone else that you think is thinking $1 million is a lot, but in fact isn't, and why you need to start shifting that strategy and thinking bigger because average honestly isn't going to cut it. I hope you guys have enjoyed it. I'll catch you guys in the next one. Thanks guys.